Welcome to our short course, Best Crypto Strategy to Avoid FOMO and HODL Mistakes in 2025. I'm JB Growth. Let's start by identifying 3 common reasons for crypto failures. Buying on FOMO, the fear of missing out. We have all probably done it, but as we know, it often does not turn out well. Buying the dip. Buying the dip and averaging down works until it does not. This is how many have blown up accounts. Buy and hope. But hope is not a strategy. Let's move beyond emotion and discuss real results from 4 types of approaches. First, HODL. It is said this was originally a typo that caught on and now has come to mean hold on for dear life. We can see if we go back to the end of 2020 to today, the HODL approach would have produced some big returns at Bitcoin and massive returns in some big name altcoins. Looking back the last 3 years, altcoins would have greatly underperformed Bitcoin and the S&P 500 stock index, and some with massive losses. The last 2 years, the same would have been true, with the exception of a few coins like Solana. DCA, or dollar cost averaging, seems to be a very good way to enter coins and manage risk. But again, if we look at several time frames, most coins would underperform compared to Bitcoin, and ETH would be very flat or even underwater, and coins like Matic would have given big losses. Would diversification help minimize risk and give better returns? This again would vary significantly with which period of time we look at. Going back 5 years, there was a massive return on many altcoins, and a diversified crypto portfolio may have done very well. But going back 4 years, results was not much different than Bitcoin and would have had significantly more risk and volatility. Going back 3 years ago, altcoins would significantly drag down performance as they underperformed Bitcoin. And 2 years ago, similar with a few exceptions like Solana. So if we look at crypto portfolio management, diversification is very hit and miss, and is significantly varied depending on the crypto market conditions. Warren Buffett says, diversification is a protection against ignorance. It makes very little sense for those that know what they are doing. A third approach, less commonly followed in crypto communities, is that of the trend follower. Using crypto trend analysis, we can examine the 4 stages of market trends. This is based on some of the best active stock investors and traders in history, but we have adapted over the years for the fast-moving crypto markets. In stage 1, we lose time. In stage 2, we can make huge gains. Stage 3 is volatile and loses time, but has opportunities and blow-off tops. Stage 4 is a price ranging below a major moving average and is where we lose time and capital. By staying in stage 2 and rotating to strong trends, we can minimize risk and maximize gains. It is extremely important to manage losses in large drawdowns, to not only protect principal, but to lock gains. Looking at the math of every 5% loss past 20%, we see it becomes a staggering hole to climb out of. Managing risk and staying in good trends is the way a trend follower can have an edge in the market. Let's look at a few examples. Bitcoin is likely the best crypto to hold long term. But using it as an example, let's go back to January 2020. At the time I'm making this, in April 2025, holding Bitcoin would show a 950% return, meaning $100,000 would now be worth $1,050,000. The maximum drawdown would be a 75% loss. This would be very painful to hold through. Using the trend following confirmation rules for this same time period, we would have 4 entries and 4 exits. This would have produced a return of 1,400% and a maximum drawdown or loss of only 22%. $100,000 would have grown to $1,400,000 with less risk than the buy and hold strategy. This would be an example of minimizing risk and maximizing returns, but the results are much more dramatic with altcoins. Buying Solana on January 2021 and holding till today would have produced over 6,000% return. $10,000 would have grown to $610,000, but there would have been a drawdown of 96% along the way. Using trend following confirmation criteria with 4 entries and 4 exits, there would have been a staggering 49,700% gain with a maximum drawdown of only 38%. $10,000 would have grown to almost $5 million. But this is one of the better coins. Let's look at Solana the last few years. 2 entries and 2 exits. 737% return with a 34% drawdown. $25,000 would have grown to $209,250. Trend following also creates opportunities with trend rotation. We can identify leading trends by looking at Bitcoin pair strength of an altcoin. For example, Ethereum and Solana both had positive trends in October 2023, but ETH had a bleeding Bitcoin pair with 52-week lows, while Solana had positive trending Bitcoin pair strength near 52-week highs. ETH moved 100% and locked at a 70% return above the 10-week simple moving average, while Solana moved 700% and locked in over 500% return above the 10-week simple moving average. Rotating to market leaders showing relative pair strength has demonstrated time and again as a critical ingredient for super performance in both the stock market and crypto markets. If you would like our Bitcoin pair strength indicator, go to the link in the description. We will unlock it for you at no cost. While trend following is powerful, the most advanced approach is swing trading. While the market sometimes gives good trends to follow, sometimes it does not. We take what the market gives us. As trend followers, we look to hold trends for big moves, 200% plus. As swing traders, we can compound smaller moves for the same or better results with even less risk. For example, the market may give us more 40% moves than 200% moves. But compounding 4 40% moves would give us a return of 384%, much bigger than the 200% move. The market may also give us more 20% moves. 8 20% moves compounded would give us a return of 430%. Let's look at a trade we do with Arrow as an example. Fast-moving altcoins may respect a shorter-term moving average like the 20-day exponential moving average. After a great entry using our triple confirmation criteria of trend, pair strength, and price action, we held the trend above the 20-day EMA until it had 2 closes below, locking in a gain of 1,200%. On the second attempt, we re-entered using triple confirmation criteria, and this time the market gave us a 65% return. But 65% compounded on 1,200% is another 780% return, bringing the total to 1,980%. As the trend set up a third time, it gave us only a 24% return. But 24% on top of 1,980% is an additional 475% compounded return, bringing the total return on the Arrow trades to 2,455% return. $10,000 would have grown to over $255,000. The market after the third exit showed a massive decline, with Arrow down 86% from the high point. Profits were locked months before this with trend following sell rules. Another example of swing trading and trend rotation would be the virtual trade. Swing trading criteria adds price setup to trend and pair strength for more precise entries and risk management. Using PrecisionCryptoTrading.com's screener and PCT rating, faster moving opportunities can be discovered. The virtual trade produced a 435% return in a few months with minimal risk. We invite you to level up your skills. As a precision trend follower, capture big moves and trend rotation. Or a precision swing trader, limiting risk and maximizing compounding. Or explore a combination of both. We have training courses, tools, coaching, and a team that can help with both. We invite you to learn more.